What is happening, crypto crew? Get ready, because the news cycle is absolutely exploding today, and you need to know what's going viral right now. We're diving headfirst into the most critical updates that could shape the entire market, so buckle up. We've got major price movements that have everyone talking, groundbreaking technological shifts you won't want to miss, and some bold predictions that are turning heads. This is your essential briefing, the information you need to stay ahead of the curve. Don't get left behind. This is Bitcoin Bulletin, and we're kicking things off with a bang. First up, the digital gold is facing some serious headwinds, with price action that has investors on the edge of their seats. Is this a dip before the rip, or are we in for a rougher ride? We're breaking down the charts and the sentiment that's driving this volatility. Plus, get ready for some game-changing news from the heart of the US economy, as critical data is being unleashed in a way we've never seen before, promising unprecedented transparency. We'll also hear from a prominent voice making jaw-dropping predictions about where this asset is headed, a future that sounds almost unbelievable. And finally, a titan in the stablecoin space is making major strategic moves, revamping its network to focus on the future. What does this mean for you and your holdings? Stick around, because you absolutely cannot afford to miss a second of this. Hit that like button, subscribe if you haven't already, and ring that notification bell so you're always in the loop. A major dip amidst uncertainty. Bitcoin has recently tumbled below the significant $110,000 mark, sending ripples of concern through the market. This sharp decline is occurring against a backdrop of increasing macroeconomic uncertainty and a noticeable shift in investor sentiment, creating a tense atmosphere as the market braces for crucial U.S. economic data and signals from the Federal Reserve regarding its policy direction. The recent performance of Bitcoin is closely mirroring the broader market's reaction to global economic shifts, highlighting how deeply intertwined digital assets have become with traditional financial indicators. Investors are scrutinizing every piece of news, from inflation reports to central bank commentary, trying to decipher the next major move. The cautious mood among investors is palpable, fueled by recent hawkish remarks from Federal Reserve officials, which have cast a shadow of doubt over the timing and extent of anticipated interest rate cuts. This uncertainty has directly impacted institutional inflows into Bitcoin exchange-traded funds, ETFs. After an initial surge of demand that propelled Bitcoin to new heights, the pace of these institutional investments has moderated. Fund managers are adopting a more conservative approach, waiting for clearer economic signals before committing larger sums. This slowdown in institutional buying has notably lessened the upward pressure on Bitcoin's price, contributing to its struggle to maintain levels above key resistance points. Technically, the charts are painting a concerning picture for short-term traders. Bitcoin has decisively broken below its 20-day moving average, a level that had previously served as a robust support. Adding to the bearish sentiment, the Relative Strength Index, RSI, is showing bearish divergence, suggesting that selling pressure might be overpowering buying interest. The immediate focus is now on the $108,000 level, which is being watched as the next critical support. If Bitcoin can hold this level, a period of consolidation might set the stage for a potential recovery towards $115,000. However, a breach below $108,000 could signal a more significant downturn, potentially dragging the price down to the 50-day moving average around $102,000. Market sentiment has visibly shifted, with fear and greed indices leaning towards fear for the first time in weeks. Online discussions reflect this caution, with fewer ambitious price targets and a greater emphasis on the risks posed by upcoming macroeconomic events. Despite this, some on-chain data provides a more balanced view. Funding rates in derivatives markets have normalized, indicating that highly leveraged traders may be exiting their positions. This deleveraging process can help reduce the risk of cascading liquidations, potentially creating a healthier environment for sustained accumulation. Audience impact. This price action is causing anxiety among retail investors, with many questioning the sustainability of the bull run and seeking clarity on risk management strategies. Analysts, however, continue to point to Bitcoin's fundamental strengths, including its fixed supply and growing institutional adoption, as reasons for long-term optimism. But is this pullback just a temporary pause or the start of a more significant trend? We're about to find out. Now, let's shift gears to some groundbreaking news from the U.S. economic front that could change how we see data forever. Data gets a digital makeover. In a move that signals a significant leap forward in governmental transparency and technological integration, the U.S. government has begun distributing critical macroeconomic data, including the Vital Personal Consumption Expenditures (PCE) price index, directly onto public blockchains. This initiative, a collaboration with leading Oracle protocols Chainlink and Pyth Network, brings key economic indicators onto decentralized platforms such as Arbitrum, Ethereum, and even Bitcoin. The goal is to provide unparalleled real-time accessibility and integrity for this crucial information, paving the way for innovative applications in decentralized finance, DeFi, prediction markets, and the burgeoning world of tokenized assets. This blockchain-based data distribution is a landmark development, aiming to enhance the efficiency and trustworthiness of economic reporting. By anchoring data using cryptographic hashes, the government ensures its immutability and verifiability, offering a robust alternative to traditional data dissemination methods. This innovation is particularly significant for the crypto space, as it directly impacts how financial markets interpret economic signals. Bitcoin's price has seen fluctuations influenced by the latest PCE inflation figures, which hit 2.6% year-over-year, a key metric closely watched by central banks and investors alike. The integration of this data onto blockchains means that DeFi protocols and market participants can access and react to this information with greater speed and certainty. Bitcoin itself is currently navigating a complex market landscape, trading within a range between $107,000 and $113,600. Analysts are closely monitoring key support levels around $107,000, $108,900, with resistance above $113,000. A breach below these levels could trigger a significant pullback, potentially towards the $93,000.95,000 range. Data from Glassnode indicates that nearly 90% of the Bitcoin supply is currently in profit, a threshold often associated with major market shifts. While this suggests strong underlying momentum, a drop below this profit-taking level could signal a market correction. Despite these price fluctuations, the underlying demand for Bitcoin remains robust. U.S. spot Bitcoin ETFs continue to see substantial inflows, with daily absorption figures exceeding $81 million. Moreover, institutional and corporate buyers are collectively acquiring approximately 3,600 BTC daily, significantly outpacing the rate at which new coins are mined. This sustained institutional interest, coupled with a high network hash rate, underscores a strong confidence in Bitcoin's long-term value proposition and its role in a diversifying global financial system. Looking ahead, the market remains highly sensitive to upcoming economic events. The release of U.S. jobs data, the September inflation report, and the Federal Reserve's policy meeting are critical junctures that will likely shape near-term market sentiment. While some technical indicators, like the 14-month RSI, suggest a bearish divergence hinting at potential weakening in the current bull market, many traders are still positioning for further gains. Notably, December BTC call spreads are targeting prices as high as $190,000 by year-end, illustrating the divided sentiment between technical signals and active market flows. Audience impact. This move towards blockchain-based data distribution is a game-changer for transparency in financial markets, potentially boosting trust in digital assets and enabling more sophisticated DeFi applications. For Bitcoin investors, it means more immediate and verifiable access to economic data that directly influences price. So, while the economic data gets a blockchain upgrade, what are the big names in the crypto world saying about the future? We're diving into some incredibly bold predictions next, with a prominent figure expecting Bitcoin to reach a staggering $1 million. A $1 million vision. In a bold declaration that has set the crypto world abuzz, Eric Trump, son of former U.S. President Donald Trump, has projected that Bitcoin will reach an astonishing $1 million within the next few years. Speaking at the Bitcoin Asia conference in Hong Kong, Trump not only expressed unwavering confidence in Bitcoin's ascent, but also highlighted the significant and influential role China plays in the global development of cryptocurrency. His pronouncements come at a time when Bitcoin is experiencing market fluctuations, making his optimistic outlook particularly noteworthy. Trump's conviction stems from what he describes as surging institutional demand and the inherent scarcity of Bitcoin. Despite the cryptocurrency trading significantly below his projected $1 million target, having recently reached an all-time high of $124,480 in mid-August, his confidence remains unshaken. He attributes the recent market uptrend, which saw Bitcoin gain 18% year-to-date, to more favorable regulatory measures under the Trump administration and the increasing appetite from institutional investors. This sentiment suggests a belief that a pro-crypto regulatory environment is a key catalyst for significant price appreciation. When questioned about potential discussions between President Trump and Chinese President Xi Jinping regarding cryptocurrency, Eric Trump suggested that both nations possess a deep understanding of digital currencies. He lauded China's contribution to advancing Bitcoin and cryptocurrencies, calling the country a hell of a power in this domain. He extended similar praise to the Middle East for its enthusiastic embrace and rapid development in the cryptocurrency space, indicating a global shift towards digital asset adoption. Recalling his previous statements at the Bitcoin MENA conference, where he emphasized Bitcoin's importance in a changing global market, Trump reiterated his positive outlook. He linked the surge in Bitcoin's price following his father's election to his confidence in the future of the crypto landscape. He views Bitcoin not just as a digital asset, but as a fundamental paradigm shift in how society perceives money, wealth, and the future of finance, stating, "The revolution is not coming, it's already here." Trump also emphasized Bitcoin's unique ability to foster an international community, describing it as one of the most diverse groups globally. He believes that discussions around Bitcoin unite people from various cultures, societies, languages, and religions, making it a force for good for humanity. He further positioned the United States, under his father's potential leadership, as a leader in the digital asset revolution, claiming more progress has been made in the 7 months since Donald Trump's return to office than in the previous decade. This increased family involvement in the crypto sector is evident in their recent initiatives, including the launch of a crypto exchange, a stablecoin, a Bitcoin mining operation, and digital asset ETFs. A Bitcoin mining company backed by Eric Trump and Donald Trump Jr. is also reportedly preparing for a Nasdaq listing, signaling a significant push into the mainstream financial markets. Audience impact. Eric Trump's $1 million Bitcoin prediction has ignited considerable debate, with some hailing it as a visionary forecast and others dismissing it as overly optimistic. It highlights the growing influence of political figures and traditional business leaders in the cryptocurrency discourse. So, we've heard bold predictions and seen economic data go digital. But what about the infrastructure behind it all? We're turning our attention now to a major stablecoin issuer, making significant changes to its network strategy. A network evolution. Tether, the company behind the world's largest stablecoin, USDT, has announced a strategic shift in its approach to legacy blockchains. While initially planning to cease all redemptions and freeze USDT tokens on 5 older networks, RGB Layer, Bitcoin Cash SLP, Kusama, EOS, and Algorand, by September 1, 2025, Tether has revised its plan in response to community feedback. The company will now discontinue direct issuance and redemption services on these chains, but will not freeze the smart contracts, allowing USDT tokens to remain transferable. This strategic pivot means that while USDT tokens can still be moved between wallets on these legacy blockchains, they will no longer receive official support. Tether's decision prioritizes resource allocation towards more scalable and actively used blockchains, reflecting a broader industry trend towards efficiency and user demand. CEO Paulo Ardoino has previously emphasized that phasing out support for underutilized networks allows the company to concentrate on platforms with greater developer activity and faster transaction speeds. Tether has already been expanding its USDT presence on newer networks like Avalanche, Polkadot, NEAR, Solana, and the Lightning Network, signaling a clear direction for its future development. The transition away from these legacy chains is expected to have a limited impact, given the relatively small volume of USDT currently operating on them, estimated in the tens of millions of dollars compared to billions on more prominent networks like Ethereum and Tron. However, Tether strongly advises users holding USDT on the affected blockchains to redeem or migrate their tokens before the September 2025 deadline. After this date, these tokens will no longer be redeemable, effectively rendering them unusable. In a significant move to enhance its integration with the broader Bitcoin ecosystem, Tether also announced that USDT will soon be available on the Bitcoin network via the RGB Layer 2 protocol. This integration aims to leverage Bitcoin's robust security and decentralization for stablecoin transactions, enhancing privacy and efficiency. The RGB protocol enables smart contract functionality and asset issuance on Bitcoin, a capability that could unlock new use cases for the cryptocurrency, making it more suitable for everyday transactions. Tether's CEO views this as a crucial step in realizing Bitcoin's potential as a global financial tool. Tether's commitment to transparency and community engagement remains a priority throughout this transition. The company is adapting to the evolving cryptocurrency landscape, focusing on technological advancements and market demands to ensure the continued utility and relevance of its stablecoin. This strategic realignment underscores Tether's dedication to innovation and its role in shaping the future of digital finance by focusing on scalability, efficiency, and user-centric solutions. Audience impact. While the impact on most USDT holders is minimal, users on the affected legacy networks are being urged to act quickly to avoid losing access to their funds. The move to Bitcoin via RGB highlights a growing trend of integrating stablecoins with the foundational cryptocurrency's infrastructure. So we've covered price drops, blockchain data, bold predictions, and network shifts. That's a lot to digest. Stay tuned for our lightning round recap and your chance to get involved. And that's a wrap on today's explosive crypto news. Bitcoin faced headwinds, dropping below $110K amidst macro uncertainty. Meanwhile, the US government is making economic data blockchain transparent, a major tech leap. Eric Trump is making waves with a $1 million Bitcoin prediction, highlighting global crypto development. And Tether is strategically shifting focus to future-ready blockchains, streamlining its network. Don't miss out on any of these critical updates. Smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and ring that notification bell so you're always ahead of the curve. Follow us on all social media platforms to join the conversation and share your thoughts. We'll see you in the next one.